This is your LMAX exchange technical update for Friday, April 21st, 2017. Euro dollar. So although the euro has seen a nice bounce this week, extending its recovery out from recent lows at 105.70, the outlook is less clear, and we're at a critical inflection point here in the middle of a very important range. Above, we're looking at the 2017 high at 109.06, and below, we're looking at that critical low, that base that we had seen looking back to the end of February and early March at 104.95. A break on either end is going to be required for a clearer directional insight. If we take out the 109.06 high, that will suggest that the market is forming a major base here, opening the door for a potential extension up towards the 115 area. If, on the other hand, we're unable to take out that 109.06 high and the market remains capped below the level, this could open the door for a break back down below 104.95, with a break there to suggest and strengthen the outlook, the bearish overall outlook, exposing a retest of the 2017 multi-year low from January at 103.41, below which exposes parity further down. So again, although we've seen a nice bounce in recent trade, it would really take a break back above 109.06 to strengthen bullish prospects, and while we hold in the middle of this range, it's best to wait and see which way the market breaks, whether it breaks back below 104.95 or above 109.06. On a very short-term basis, this recovery out from 105.70 does suggest the possibility that the market is looking to confirm this base, putting in a higher low here above 104.95. But again, we're in the middle of this range here, and 109.06 above and 104.95 below are required for clearer directional insight. Sterling dollar, a major break in the pound this week, with the market taking out the 2016 consolidation high at 27.75. This was a multi-week, several-month consolidation high, a bearish consolidation that has now been broken, suggesting the possibility that the market could be looking now to be headed higher over the days and weeks ahead. The break, if it's sustained, does open the door for a measured move that would take us up towards the 135 area, which coincides with highs that were seen back in 2016, in June of 2016 through about September of 2016. So that 135 area does make sense as the next objective to the top side, but again, it's going to be contingent on whether the market can hold above 27.75 in the days ahead. If we do see any setbacks, they should now be supported towards the 125 area, with only a breakdown back below recent support, which came in around 123.60, to put the pressure back on the downside. So again, we could see pullbacks here over the short term, but the break is a significant development, which means that dips now should be looked to be bought for higher lows, as opposed to rallies being sold for a resumption of the bearish trend, given this latest breakout to the top side. Only back below that low that we'd seen going back to the 10th of April, down around 23.60, would compromise this newly adopted, more constructive outlook for the pound. Dollar yen. So despite this latest little recovery that we're seeing in dollar yen, and despite the possibility that the market could extend a little bit higher, the overall trend here favors the downside, and there is risk for additional fresh declines in 2017, with the market still not testing a measured move objective at 107.60. This is a measured move objective that comes from a 400-point range that was seen between 111.60 and 115.60 earlier this year, and that 400-point range was broken, opening a 400-point range to the down, a 400-point target to the downside at 107.60. So there is risk still, despite this bounce, for additional dollar yen declines, and rallies should be looked to sold in favor of a lower top and fresh downside extension, and for a lower low. Euro Swiss. Euro Swiss has put in a little recovery over the past several sessions, but rallies in this market continue to be exceptionally well offered, with the market stalling out and driving back towards key support down towards 106. Overall, the downtrend here is intact. A lower top is sought out at 108.26 by that high that we had seen back on the 13th of March, which will be confirmed on a break below that 2016 low at 106.24, which the market has been unable to break in recent months. But a break below that low would confirm a lower top at 108.26 and expose a drop down towards the 104 area further down. Aussie dollar. Aussie has seen a nice little recovery off the recent lows around 74.75, but the market overall is looking like it's putting in a top here after it is once again capped into significant medium-term resistance around the 78 area. So look for any rallies here to be well capped in the sessions ahead of 76 ideally in favor of the next downside extension, which would be confirmed on a break below 74.75, exposing a potential acceleration back down towards the 70 area. Dollar CAD. So dollar CAD has been very well bid after being supported several days back ahead of 132 at 132.24, and the outlook here favors continued upside for a break above the multi-day peak at 135.99, which would expose a fresh upside extension towards the 140 area. Any setbacks over the short term should be well supported down and ahead of 132 again, with only a break back below that 132.24 low to delay the constructive outlook. Kiwi dollar. Kiwi has been mostly consolidating off recent lows, and the overall outlook here favors the downside, with the market expected to be well capped into rallies ahead of the next downside extension below medium-term support at 68.62, below which could expose an acceleration towards the 65 area further down. SPX 500. The S&P 500 has entered a period of consolidation and minor correction following that break to fresh record highs that was seen back in early March just over 2,400. At this point, it's only a minor correction and consolidation while the market holds above some critical support at 2320, but a break below 2320 would suggest a more significant structural shift, opening the door for fresh downside towards an initial measured move objective at 2270. But until we see that break below 2320, the market does retain its constructive outlook, and there is risk for fresh upside back towards the record high and above, which would expose the next major extension towards the 2500 area. Gold. So gold continues to show signs of a major base since the market stalled out ahead of 1100 back in 2016 and has since been making a series of higher lows and higher highs. The most recent break is seen above the previous 2017 peak at 1265, which exposes a measured move towards 1335, just shy of the 2016 peak at 1375. And so any setbacks that we do see should now ideally be supported ahead of 1230 for that next higher low and continuation of this upside towards that 1335 objective. Ultimately, though, it would take a break all the way back down below 1195 to compromise the constructive outlook for gold.